8K Miles is another counter that we are tracking today, and the news came in that US subsidiary of 8K Miles Software Services Inc. has acquired Mindprint Inc., which is based in Canada, and this is in their pharmaceutical vertical. The acquisition spree that they have been on, they are going to continue with it, and this is another feather in 8K Miles cap. The counter has been holding comfortably with the gains of about 1.61% through the day today. I spoke to the management of 8K Miles earlier, Mr. Suresh Venkatachari, chairman at 8K Miles Software Services, and when I asked him the rationale behind this particular acquisition that has really happened in Canada and how exactly is that going to help the company, then this is what he had to say.
Okay, the company we acquired is called Mindprint, which is a clinical research organization startup actually, which helps CROs to improve the operational efficiencies and also provide analytics. It's a SaaS software company. It's a very startup. It adds into our portfolio of offerings of the pharma and life industry. They have a very good technology which integrates with our existing cloud offering, and we can able to go and offer to our existing clients and also to their CRO customers with the cloud offerings.
Could you also give us the details of the deal arrangement that you had with this company?
Yeah, we acquiring all the assets of Mindprint and integrate with 8K Miles for a value of $400,000, which is paid in the cash and the stock of the US subsidiary. We acquired this Mindprint through our US 8K Miles Software Services, which is subsidiary of 8K Miles Software Services Limited, India.
For an investor who's watching this particular show, could you tell us how exactly in terms of revenues are you going to benefit from this particular acquisition?
We didn't buy this company for purely revenue perspective, like basically adding the revenue into our bucket. That is not our intent. Our main intent is actually to leverage their software and increase significant revenue to our both top line and bottom line. They currently do less than $500,000 in revenue sales and barely break even. It's a very small startup. Startups don't make huge money, but with their technology we can able to go and offer to our existing customers, where we can able to build a significant pipeline of revenues from our existing customer portfolios. So it's basically an incremental solution offering to our existing customers. They leverage our existing customer relationships, where we can able to upsell and cross-sell the analyticals and operational efficiency software. And moreover, Mindprint is like an annuity revenue customer. So the revenue model, whatever we build, it will be like a multi-year contracts and scalable model. So it will improve our top line and bottom line and improve the EPS efficiencies over, I would say, in the next 6 to 12 months period.
Any specific targets that you're eyeing out for, say, in terms of revenues in the next couple of quarters that you're talking about?
Right now, I'm not able to giving you any projections for our growth actually. So we would able to give probably after a couple of quarters actually. But however, what we are looking at is actually we are intent to acquire additional more acquisitions actually, companies in the pharma and life science area to improve our whole offering. We are launching our solution very soon, and we want to add more additional technology which can able to help our customers to leverage the cloud efficiently.
How many more acquisitions have you planned? Any kind of opportunity? What kind of opportunity are you actually seeing in the pharmaceutical vertical?
We are looking at probably in the next couple of quarters, we would intend to acquire at least 1 or 2 companies to improve our customer reach and also domain extension. And it would be like in FY15 and then probably in 16 also, we would looking to grow both organically and inorganically through acquisitions. We are actually adding companies which can able to help us either in terms of domain or technology or customer relationship. That's our focus. Since we are a cloud company, it helps in every aspect to offer as a not pure technology player, also a domain-based player.
And lastly, before we let you go, give us a sense of how the quarter has been for your company, the 4th quarter so far.
Yes, we are showing our growth for the past few quarters, and we expect to continue to grow in a similar fashion. Currently, we don't give any specific number guidelines, but we see a good growth, and we are seeing a repeat order from our existing customers, and also our earlier acquisition of Surge Solution, the healthcare, which is playing in a very good growth model. We can able to sell now our cloud offering to the hospitals. So this is actually giving a better growth, I would say, visibility for us. The reason why we are not giving guidelines is we want to probably grow to a little medium size, then we can able to give a more visibility based on each customer growth and industry growth. But what we see is definitely we are seeing an uptake with our existing customers, where we can able to sell more offerings, and also to the new customers through acquisitions.
All right, so there you heard the management of 8K Miles talking about their business outlook and the plans ahead, looking ahead for more acquisitions. At least one or two more companies they're looking forward to acquire in the next couple of quarters. We are slipping into a very short break right now. Don't go anywhere. The management of Man Infra is going to be talking to us about the recent